Okay, hi there. Welcome to a new growth and development video. We'll take a few minutes to look at the fast growing country of Bangladesh. Well, this is a fascinating country to look at when building your contextual awareness in development economics. Bangladesh is emerging from a lower income to a middle income country, and it's heavily dependent on the ready-made garment sector. It's one of the fastest growing countries in the world, and as such, we can identify some of the benefits and also the economic and social costs from such a fast pace of expansion. Bangladesh has certainly made significant progress in cutting extreme poverty, and indeed their per capita income, GNI per capita, might soon overtake that of India. Here's the growth rate for Bangladesh. At current growth rates, Bangladesh will overtake India in per capita GNI terms by 2022. And as you can see, it's a member of the 7% club. If you grow at 7% per year, your GDP doubles in size every 10 years. As a result of their fast growth, their significance in the world economy has increased. Bangladesh is considered to be among the next 11 emerging markets, and their share of world output, adjusted for PPP, has lifted from 0.49% in 2014 to 0.6% in 2020 forecast. Okay, so still less than 1% of world GDP, but when you have a population of in excess of 160 million people whose per capita incomes are rising quite strongly, there's clearly significant opportunity there for Bangladesh. Strong growth helps to cut extreme poverty. Here is the blue line showing per capita incomes in GDP terms in current prices, not adjusted for inflation. But look at the linear GDP growth trend, the straight line there. The growth rate, the trend growth rate seems to have increased significantly from about 4.5% to closer to 7%. The government's Vision 2041 seeks to eliminate extreme poverty and actually secure upper middle income status by 2031. And Bangladesh actually wants to achieve high income status, in other words, avoid the middle income trap by 2041. So extremely ambitious targets set by the government. You can see that the headcount ratio, the extreme poverty ratio of $3.20 a day, has fallen over the years, from over 85% in 1991 to around 45-50% now. There's also been significant progress in cutting the extreme poverty rate. And at the same time, the Gini coefficient, a measure of income inequality, has remained broadly constant at around 0.32. As normal in these videos, we just take a look at some development indicators. Crucially, Bangladesh is still ranked only 135 in terms of Human Development Index. It has a per capita GNI PPP adjusted of just over $4,000. Over 1/3 of children under the age of 5 years are suffering from stunting, moderate or severe, of course linked to malnutrition. That figure needs to come down because stunting and the long-term impact of malnutrition has a significant effect on human capital and productivity. Remittances in Bangladesh are significant. We'll come back to that in a second. But last year, and the remittance flow in net terms, money flowing in, money flowing out, of over 5% of GNP. A high level of working poverty, so a lot of people at or around the poverty level of $3.20 a day. Just under half of those people in work are working poor. So many people have formal jobs in the labour market, but are close to the extreme poverty line. And here's another indicator. Health spending as a share of GDP is relatively low, just 2.4%. Under half of females have secondary education, and the government is only taking in around 10% of GDP in tax. Here's another example of a developing country, emerging country, that has a low tax to GDP ratio. And of course, that limits how much money they can then spend on key public services. Okay, so those are some of the development indicators. The macro side, figures look pretty good actually for Bangladesh. Clearly very fast growth. Inflation at or around 5%. You'd expect that for this type of economy. Unemployment is very low, 4.3%. But keep in mind that nearly 2 million people in Bangladesh join the labour force every year because of the demographics of Bangladesh. So, creating enough jobs to maintain low unemployment is a significant challenge for the Bangladeshi economy. Their fiscal balance is in deficit. The current account is pretty low. It's a deficit, but that's really helped by remittances and fast growth of exports of garments, which we'll come back to. Low external debt, relatively high investment spending above 30% of GDP, and a high level of gross national savings. Some other background information. The taka is Bangladesh's currency. It's a managed floating exchange rate. The central bank has intervened on several occasions just recently to influence the currency value of the taka. They are members of the South Asian Free Trade Agreement, SAFTA. But look at those rankings there, their competitiveness. They need to break into the top 100 quickly if they can. A low ranking or a high level of corruption, according to Transparency International, and they come pretty low down the list in terms of ease of doing business. If there's one key development growth ranking they'd want to improve there, it would be the ease of doing business, according to the World Bank. Now, I said before that Bangladesh is highly dependent on textiles, in particular the ready-made garments, and this chart shows this clearly. The percentage share of exports has gone up from 77% to over 83% over the last 10 years or so. And if you look at the types of products that Bangladesh is exporting, you see here that trousers and t-shirts, both industries, worth over $6 billion a year in terms of exports. So Bangladesh is a brilliant example to use in your revision notes of a country that is highly dependent on the export of ready-made garments in the textile sector. One reason is because the minimum wage in Bangladesh is relatively low compared to other garment-focusing countries. So Ethiopia has the lowest minimum wage. Bangladesh comes third lowest, but it's significantly, it's actually a third of the minimum wage in countries such as Thailand, China, and Turkey. So for the moment, Bangladesh has a significant labour cost advantage in producing these labour-intensive, cheap clothing items. One of the consequences of this, of course, is that rich countries, advanced nations, tend to import from the cheapest source, particularly when it comes to clothing and garments. So Bangladesh is the European Union's second biggest source of imports of clothing. China has a third, Bangladesh 20%. Turkey, of course, outside the EU, 12%. And this chart from the Observatory of Economic Complexity confirms that indeed the green area dominates. Sweaters and knitwear, t-shirts, trousers dominate the Bangladeshi export of goods pattern. Bangladesh is now the 54th largest export economy in the world, but when we come to economic complexity, in other words, the sort of the know-how and the capabilities of producing a range of related products, Bangladesh is ranked only 123rd. So it's a big exporter, but exporting products of low complexity. And they tend to import things like raw cotton and manufactured goods. So it's a classic example. If we go back, they're exporting the ready-made garment products, importing the component parts to make these things. This idea of complexity is really important. So the top chart here shows revealed comparative advantage. That's when you have a comparative advantage if the product share in the country's exports is greater than the share of the product's total exports in global exports. So clearly, if you look at the green area, when it comes to apparel, Bangladesh has a huge revealed comparative advantage. It's a great example to use. And that's changed over the years. So from textiles, that's almost disappeared now. It's ready-made garments. Look at the bottom, Vietnam. Vietnam has a significant ready-made comparative advantage in telecommunications, sound recording, and reproductive equipment. It's moved more into the manufacturing and assembling of LCD screens and computers and cameras and televisions and what have you, other stuff. Well, crucially, Bangladesh has a low level of economic complexity. And that means that their garment sector, which dominates, I think it employs nearly 5 million people, the garment sector has few linkages to other more complex manufacturing industries. So that's going to hold Bangladesh back in the medium term if it wants to significantly lift per capita incomes. Bangladesh is clearly very, very good at producing the final shirt, the t-shirt, the trouser. But it doesn't have a comparative advantage in the intermediate goods used in the production of more complex final products. Employment, again, is shifting. The share of agricultural employment falling from 48% to 40% over the last 10 years. The share of industry rising, that mirrors the increase in the garment sector. Bangladesh has a young population and a fast growing population. Only about 5% of the population, I think, are over the age of 65. The median age is 25, 26. Most of their exports go to European countries, Germany, United Kingdom, Spain, France, and Italy. We said a few minutes ago that for Bangladesh, remittances are really important. This is an example, another example of a country that has become increasingly reliant on net inflows of remittances. And in 2018, they climbed above $15 billion. And it's the Gulf countries, especially countries like Saudi Arabia and the United Arab Emirates, that are the biggest source of remittances for Bangladesh. Bangladesh has a very, very young labour force. Can't always create enough new jobs to absorb those people entering the labour market. I read somewhere that on average over 500,000 Bangladeshi workers go abroad annually as part of a growing diaspora of people. Urbanisation is another big issue to follow if you're looking at Bangladesh as one of your context countries. And no country has ever grown rich without urbanising first. Well, Bangladesh is clearly urbanising. It's urbanising at a fairly fast rate, and this process will undoubtedly continue at least over the next 20 years. So the urban population has gone up from just under 39 million people in 2005 to over 60 million people in 2018. And I think this is perhaps one of the greatest long-term challenges facing Bangladesh. It's one of the most densely populated countries in the world, and in fact by 2050 they say that over 50% of the population will live in urban areas. Well, Bangladeshi cities, including Dhaka, are characterised by an infrastructure deficit, often resulting in very, very low, poor living conditions. Dhaka has over 3.5 million people living in low-income communities where access to basic services such as water, sanitation and healthcare is limited. Dhaka ranks as one of the least livable cities in the world, according to the 2018 survey from The Economist. And here we show some more detailed data on the infrastructure ranking. The Bangladesh is ranked 109th on infrastructure. Commensurate countries such as Sri Lanka and India much better rankings, and clearly much worse than a lot of other East Asian countries. So infrastructure projects are absolutely critical to Bangladesh. Road upgrades, crucially, simple things like effluent treatment plants. Dhaka's existing sewage system serves only about 1 person in 5. 20% of the city's population have access to a sewage system. The other big challenge facing Bangladesh is the exposure, the vulnerability to the impact of climate change. 60% of Bangladesh's land surface is at 5 meters or less above sea level. Frequent flooding, of course, you'll have seen that in the news. Bangladesh is considered to be one of the countries most threatened by extreme climate change and change-related natural disasters. Some estimates claim that the rising sea levels and extreme rainfall episodes could lead to a loss of 17% of their land surface and 30% of their food production by 2050. Just more recently, what's been happening with the US-China trade war is actually potentially helping Bangladesh. So what we've been seeing happening is a couple of things. First of all, the trade war is encouraging Chinese entrepreneurs to establish factories in Bangladesh in order to bypass US tariffs. So you'd probably expect an increase in Chinese FDI into Bangladesh as a result. And US retailers including the likes of Walmart, they're placing more work orders with Bangladesh manufacturers in order to offset increasing tariffs. So trade diversion at work in Bangladesh. So the key question, can the frontier markets, can the emerging economy of Bangladesh, can it sustain 7% growth? Will it realise its potential to be amongst the world's largest economies along with the BRIC nations? Well, lots of limitations, the infrastructure deficit, the challenge of creating new work for the fast-growing population, the threats from climate change, these are all negatives. However, three positives. First of all, there is potential for Bangladesh to become a favoured outsourcing venue for business services, particularly in IT services. A young IT literate population at low cost could be very, very attractive to inward investment. Secondly, this process of infrastructure investment, those mega projects which are in place, in part funded by China, in part funded by the Asian Infrastructure Investment Bank, that infrastructure investment is going to lift both aggregate demand and long-run aggregate supply if successful. Short-term cost to the current account as you import the machinery and the technology and the materials, the construction materials, but in the long term, Bangladesh's commitment to lifting infrastructure investment will be a major fillip to their productive capacity. And fundamentally, the size of the base matters. So Bangladesh has a large population, its per capita incomes are growing, that is going to drive consumption growth, and of course higher consumption drives increased investment. So hopefully you can see here there's lots of ways that you can use Bangladesh as useful context in your economics exams. Think about the advantages of comparative advantage in garments, but also the drawbacks from being too dependent on ready-made garments. We focused in particular on the infrastructure deficit as a development and growth barrier. Bangladesh is a great country to think about in terms of the significance of remittances for their economic performance, but also a country highly exposed to the impact of climate change. As a country that exports products, the trade war between the United States and China is having trade diversion effects. How much further can this rural-urban migration in Bangladesh happen? As this process of urbanisation continues, will Bangladesh experience a kind of very, very fast growth of manufacturing, light manufacturing in urban areas, such as China experienced, or is Bangladesh perhaps approaching a lowest turning point where the supply of surplus labour from the rural areas, agricultural areas, starts to diminish and wage costs start to rise? So loads of growth and development issues. I hope you think that Bangladesh could be a really good country to study as you prepare for your exams.